In the heart of Germany, as the 20th century drew to a close, a company named Wirecard emerged. It was 1999, the dawn of the internet age, and the world was on the cusp of a digital revolution. Wirecard, with its sights set on this burgeoning landscape, positioned itself at the forefront of the digital payments industry. The founders, driven by a vision of a cashless society, its mission was simple yet ambitious: to make online transactions seamless and secure. The company's founders, armed with ambition and a vision for the future, set about building their empire. They targeted a market ripe for disruption, one where traditional financial institutions were slow to adapt to the digital shift. With an unwavering belief in their technology and a keen understanding of the evolving needs of businesses, Wirecard began to make its mark. The early days were filled with challenges, but the team's resilience and innovative approach set them apart. Early success fueled the company's growth, attracting investors and partners eager to be part of the digital payments revolution. Wirecard's innovative platform, offering a range of online payment solutions, quickly gained traction. It carved a niche for itself in the burgeoning e-commerce market, providing businesses with the tools they needed to thrive in the digital age. The company's ability to adapt and innovate was key to its early success. As the new millennium dawned, Wirecard's star continued to rise. Its reach expanded beyond Germany's borders, penetrating international markets and solidifying its position as a global player in the fintech arena. The company's rapid ascent seemed unstoppable, a testament to its innovative spirit and its ability to capitalize on the digital boom. Wirecard's journey from a small startup to a global powerhouse was marked by strategic decisions and a relentless pursuit of excellence. The company's story is a reminder of how vision, innovation, and determination can transform an industry. The 2010s were a time of unprecedented growth for the tech industry, and Wirecard rode this wave with remarkable success. Smartphones became ubiquitous, internet penetration skyrocketed, and the digital landscape transformed at a pace never seen before. The world was becoming more connected, and with this connectivity came a surge in online activities. People embraced the convenience of online shopping and digital transactions, fundamentally changing the way commerce was conducted. This shift created a fertile ground for companies like Wirecard to thrive. This digital boom proved to be a goldmine for Wirecard, propelling it to new heights of financial success. The company capitalized on the growing demand for secure and efficient payment processing solutions, quickly becoming a leader in the fintech space. Investors, captivated by the company's impressive growth figures and seduced by its promises of even greater returns, poured money into Wirecard. The allure of high returns and the company's innovative approach made it a magnet for investment. The company's stock price soared, turning early investors into millionaires and cementing its status as a darling of the financial markets. Wirecard's shares became a hot commodity and its market valuation skyrocketed. Wirecard's name became synonymous with innovation and disruption, a shining example of European tech prowess on the global stage. The company was hailed as a trailblazer, pushing the boundaries of what was possible in the world of digital payments. As its coffers overflowed with cash, Wirecard embarked on an aggressive expansion strategy. It acquired companies, entered into strategic partnerships, and invested heavily in new technologies. This expansion was not just about growth, it was about solidifying its position as a global leader. Wirecard extended its reach into new markets, establishing a presence in regions that were previously untapped. This global expansion was a testament to the company's ambition and its desire to dominate the digital payments landscape. This relentless pursuit of growth seemed to know no bounds, fueled by the company's unwavering ambition to become the world's leading digital payments provider. Wirecard's vision was clear: to revolutionize the way people and businesses conducted transactions. Wirecard's success story was one for the history books, or so it seemed. The company's rapid ascent was nothing short of extraordinary, capturing the imagination of the business world and beyond. The company had come a long way from its humble beginnings, transforming itself into a fintech behemoth with operations spanning the globe. Its journey was a remarkable one, filled with milestones and achievements that set it apart from its competitors. Its rise was meteoric, its future seemingly limitless. Wirecard appeared to be on an unstoppable trajectory with no signs of slowing down. However, beneath this veneer of success, a darker truth was beginning to stir. Unbeknownst to many, the foundations of Wirecard's empire were not as solid as they appeared. The company's rapid growth and ambitious expansion masked underlying issues that would soon come to light. In 2019, the first cracks in Wirecard's carefully constructed facade began to appear. The company, once hailed as a beacon of innovation in the fintech world, was starting to show signs of trouble that could no longer be ignored. The Financial Times, known for its investigative journalism, published a series of articles that raised serious questions about the company's accounting practices. These articles were not just casual observations, they were the result of months of painstaking research and analysis. These articles, meticulously researched and meticulously documented, exposed irregularities in Wirecard's financial reporting, casting doubt on the veracity of its dazzling success story. The discrepancies were not minor. They suggested a pattern of deception that could have far-reaching implications. The Financial Times reporters, undeterred by Wirecard's denials and legal threats, continued to dig deeper. They worked tirelessly, often late into the night, driven by a commitment to uncovering the truth. They uncovered a trail of questionable transactions, suspicious partnerships, and opaque accounting practices that suggested something was amiss at the heart of the fintech giant. Each new discovery added another piece to the puzzle, revealing a complex web of deceit. The more they uncovered, the clearer it became that Wirecard's financial health was not as robust as it appeared. The company's books were filled with suspicious entries and unexplained transactions that raised red flags among financial experts. The articles sent shockwaves through the financial world, shaking investor confidence and prompting calls for a thorough investigation. The stock market reacted swiftly, with Wirecard's shares plummeting as investors scrambled to reassess their positions. Wirecard, initially dismissive of the allegations, fought back with vehement denials. The company's executives held press conferences, insisting that the Financial Times reports were baseless and driven by ulterior motives. The company accused the Financial Times of market manipulation and launched a PR offensive to defend its reputation. They hired top public relations firms to manage the crisis, hoping to sway public opinion in their favor. However, the more Wirecard protested, the more suspicious it seemed. Analysts and journalists alike began to question why a company with nothing to hide would react so aggressively. The company's aggressive response only served to fuel the flames of doubt, attracting the attention of regulators and law enforcement agencies. Investigations were launched and the scrutiny on Wirecard intensified. As the scandal unfolded, the world watched in disbelief. News outlets around the globe picked up the story, and it became a topic of heated discussion in financial circles and beyond. How could a company that seemingly had it all, a company that had risen to the pinnacle of the fintech industry, be embroiled in such a scandal? The questions were many, and the answers were elusive. The answer, as it would soon become clear, lay in a complex web of lies, deceit, and audacious fraud that had been years in the making. The unraveling of Wirecard's facade was a testament to the power of diligent journalism and the relentless pursuit of truth. The Financial Times' explosive revelations triggered a cascade of events that quickly unraveled Wirecard's carefully constructed web of deception. What began as whispers of accounting irregularities soon morphed into a full-blown scandal, exposing a labyrinth of lies and fraudulent activities that stretched back years. Auditors, tasked with scrutinizing Wirecard's books, uncovered a shocking truth: billions of euros in cash, supposedly held in escrow accounts, simply did not exist. These accounts, meant to safeguard funds for Wirecard's payment processing operations, were nothing more than a fabrication, a figment of the company's fraudulent imagination. Further investigation revealed a sophisticated scheme designed to inflate Wirecard's revenues and profits. The company, it turned out, had been creating fake customers, generating phantom transactions, and cooking the books to paint a rosy picture of its financial health. This elaborate charade, orchestrated by a select few within the company, had fooled investors, auditors, and regulators for many years. As the true extent of Wirecard's fraud became clear, the company's carefully constructed house of cards came crashing down. Its stock price plummeted, wiping out billions of euros in market value and leaving investors reeling. Wirecard, once a symbol of European tech innovation, had become synonymous with corporate fraud, its name forever etched in the annals of financial scandals.